following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Monday night here in Asia, Monday morning in the States. We're going to initially look at the VIX here. This is our weekly view. This is the profile that kind of past couple of weeks couldn't get above, and I've been talking about passing on some longs on the markets in general, and when this VIX came unglued last week, it's not a good sign for anybody hoping for the fear factor to hit. And as we look at this, I'm looking at our breadth here on the S&P 500. We talked about a little bit of a mixed bag for a while there, and that's kind of, we missed a little bit of a launching pad move above that 2068, 2069 on the long side. Some of you may not have missed it, but we were looking, again, for a little bit more confirmation and some confluence going on, and what do you do now? So we're going to take a look at the S&Ps really quick. And all we're doing on a day-to-day basis is we're looking at where's the edge, how do we put some probabilities in our favor. When we were rattling around here, didn't have a lot of direction down here on Navigator either. I'm showing our S&P chart, S&P 500 chart in the den right now. And as we were rattling around here, you know, under normal circumstances, without some of the little bit of clues that we thought we had on the, might want to pass on some of these longs, train took off, and, you know, what do you do now? Again, this particular index is completely underperforming some of the things that are going on in the world right now, and that's what really is concerning still. So, I mean, you know, is the risk to step into this on the long side and just play the same game? That's what we were passing on. I thought there was some risk in that. There were some better opportunities on the long side without question. And to be honest with you, the market's still changing tunes right now and kind of shifting into the dollar. You know, the market likes a strong dollar seemingly lately. And 98.75 was kind of that breaking point. I personally thought we were actually going to float down to 95.5, excuse me, before we made any new moves back up, but didn't quite get there, and really came right into our daily unfair lows instead of our weekly unfair lows. So I'm going to go back into that really quick. There we go. Here's our weekly dollar situation. Was kind of trying to be a little stingy. 95, 46, 47, never got there. Actually hit the daily unfair lows. That was kind of like a little bit of a DMZ between 96 and change and 95.47. But we hit, what is this? Blah, 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 96.49. Let me blow this up a little bit here. Lows of 96.49, unfair lows 96.42. So, you know, that's the way the dollars worked. And again, to me, the market should be reacting a little bit more positively on the upside. So I'm still a little bit looking at this move up with suspect eyes. And I normally don't do that. It's just kind of a couple of things not completely looking right here. Let's take a look at the treasuries really quick. And the reason I'm going to go through some of the usual suspects and try to get them out of the way, as we normally do on the first segment, is we're going to have Joseph Jung on again from Hong Kong after the first segment, and some of the things going on here, over here in Asia, are just completely blowing his mind. He called it, but I don't know if he called a move this big. And some of the things I wanted him to talk about are in his portfolio and kind of his world that he lives in. Some of these stocks have gone up 100% now. You know, the Hang Seng Index, the Shanghai, that thing is just, that's just madness on the upside. So here's the 10-year. You know, again, still hasn't really sloughed off here. You've got 128.14 support on the 10-year. This is our daily. I'm looking at that as a buying opportunity without question. Stops below there. And on the 30-year, still turning the rents the same way on the treasuries, by the way. And on the 30-year, this is kind of the interesting situation. This is why I pulled this up. You got 162.08. We're sitting right there, and that coincides with that 162.22 right there. So again, we're kind of at the bottom of our multi-time frame unfair lows, and that's what you really look for, is multi-time frames lining up, giving you a possible high probability setup. And again, the good news is, just like we talk about all the time, I immediately look at, where do I place my stops? It's pretty easy to see on this one based on my appetite for risk, and that's what we're looking at with the 30-year. All right, now we got to hit the currencies a little bit, and I'm just going to call this show, maybe on the currency world, the gifts that keep on giving here. This is our euro. Hello, thank you, cha-ching. Continuing to go down. Not a lot of reasons to take this trade off. We haven't had any reasons to take this trade off, except for when we had some technical damage in the euro for the first time. If you look back in time, this was back in middle of March, end of March, going back in time. That was the first time we said, you know what, we may have to pass on the intermediate. The long term is still in there, but then we had those kind of multiple long term, intermediate term inflection points lining up, just like the 30-year right now. And we've just come off of those, and we talked about, the target rich environment down below 107.02. But we talked about, leave some on the table on the short side, because this thing is more than likely destined to be in the par camp with the US dollar. So that's the situation on the euro. Let's move into the yen. As we have looked at the dollar, just screaming up. We talked about the yen here. And here's the Japanese yen USD. And we got above here. We kind of came back. This was I actually trade this product, so I kind of stopped myself out. I was like, I'm not going to take on too much heat there. But again, we're kind of moving back up this morning in the U.S. 120.34 unfair highs on the daily. That's where you got to look at that. But again, we've kind of come up into these weekly unfair highs. And why is my screen doing this? Okay. I'm not a big fan of shorting this product. We've talked about that. We look for buying opportunities, and we also talk about, some of these inflection points up top, not only passing on the shorts, but just, targets and then waiting for some closes above. You got a kind of a cool situation here on the yen, and I think we could move higher. A lot of people were calling for this thing to be in the 140 area a while back. I don't know if it's going to get that high, but we just play the profiles, and that's the way we're looking at this. We've also looked at the Aussie dollar as the shorting investment tool. This is Aussie dollar on a weekly. We've talked about staying away from this on the long side. This thing's not on sale. I think it was my coinage for this. And as we look at the dailies, this is our daily. We've got unfair lows at around 75.70 on the Australian dollar, and we're sitting right there. And I don't think this is a buy the dipper type situation on this. This is not a buy the dipper thing. This is a sell the rally thing. And we had some opportunities at that 77.19, 76.94 area, that DMZ. And, you don't get, this is a decent move here in the Australian dollar. I mean, you pick up 150, 160 pips in 2 days. This is, can't cry about that. Let's look at the Canadian. This is something else I'm kind of interested in here. And as we look at this, what do you do with the Canadian? We're right in the middle of a fair auction. We kind of talked about that the other day on the intermediate, but we're staying above long-term weekly profiles. And we talked about long-term, using the dailies, but, keeping long-term stops below 120.58. I know that's a long ways down from where it is now, but that's kind of where we would even have a hint of any technical damage. But the intermediate, we got like 124, 27, 30, that general area. You can kind of place your stops below there and just possibly let this thing breathe higher. Canadians are in a box right now because of this oil situation, without question. Lets you know something. Just like investing, spread the risk out. Here we go. Let's take a look at gold really quick. And remember, if you're just joining us, Joey Junk's going to be on just I guess about 10 minutes from now. Stay tuned. We're going to talk Asia. I'm sure you'll enjoy that. We'll also talk about a couple other things. Here's the gold situation. Again, nothing really significant here. We rallied up into that 1228. 1224, 1225 we hit. So And what we're looking at on the daily is, we're just kind of in the boxes again. Nothing significant. Dollar moving higher. I like the way gold's hanging in there, to be honest with you. I mean, this is relatively cool if you want to give it a phrase. And I've talked about this. Stops below 1182. Just try to hang in there on this one. I think we're going to get a pop at some point. All right. So that's the situation on gold. Silver. This has been something I haven't been a fan of. We talked about you couldn't really get long this again until we closed above 1660. That hasn't happened. So since we've been kind of marching forward here, and just not a lot of cool scenery on silver right now. So still want to kind of briefly mention this before we go to break. Soybeans, November. If you guys are looking at this or trading this, this is what's going on with soybeans. I'm looking at the 946 area now, 942.5 as a kind of a leverage point on the short side. Now we may rally a little bit above here, but anytime you can get a close again below, and we've kind of come up this morning, but anytime you get a close below there, I think this could drift even farther down. And the guys that I'm talking to, again, this is just talk. Fundamentally speaking, I mean, they're easily seeing in the $8 bushel range on this. Okay. We're not going to look at corn and wheat. They're just not something with any volatility right now. I think corn and wheat are just kind of settling into what they're going to be from here on out. Here's crude oil, the May contract. So we got to look at this. Crude oil's kind of been marching forward a little bit this morning, but let's look at the XLE as we always do relative to crude oil. And as we look at this, we talk about this being kind of the easier trade, if you will, and it keeps presenting itself as the easier trade on the long side. And just kind of keeping crude oil in your radar and being able to be aware of the inflection points on crude oil, and then just how do you trade the XLE? Well, you come in here, we're kind of looking at the 240s to regulate the long-term trade up right now. 80 has been some target-rich environments from before. I think we actually might plow through there this time, and I think kind of stingier stops could possibly be below 79 here. So that's kind of the way I'm looking at it. Not wanting this thing to get away from me at all. Guys, we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Having a little bit of problems getting Joey Jung on the phone with us here, and I apologize for that. We're going to try him again in just a second. Looking forward to speaking with him, and gonna have a good time in Hong Kong when I see him with Eddie and Ben from South Africa when we meet there. We'll have it's a constructive time, put it that way. Here we go. XLF, we got to look at this. The Bain. No, I wouldn't say that. I'm looking for this on the unfair lows around 24.28 to hang in there. If we can get any kind of market, the market's, drifting higher, and this thing's on a relative scale not drifting higher. I like that. I like this inflection point here, and I like to be able to put stops around it. This is our daily situation on the XLF. That's the boring truth of that one. And let's move on to, okay, I think Joey's just gonna, okay, he's there. We're gonna get him on the next break. That's great. Wonderful. Lovely. And I want to point out something that Edmundus, who was with us the other day, was really pointing out. Now, the reason I'm pulling this up is because we've got some new information. I know everybody watching this show is trading the ruble. I don't have any questions about that. I know you're all short the ruble right now. So 59, 13, 14 sitting up there, weekly unfair highs. But now we've got a little situation. Excuse me. We've let the dailies regulate this trade down. Got a new, profile attempting to appear. We may have a new box on the dailies to appear, so we may have some new trading action on that. That's just the way that ball kind of bounces when it comes to new profiles appearing. Okay, we're going to take a look at Apple really quick. Got quite a few emails about this one. What do you do with this? Well, 127.90 pre-market. That's what the drill is here. and we're going to get into the S&Ps in just a second. This is the long term on Apple. This is the weekly view. We talked about leveraging off this 122 general area down here before, and that was, excuse me, choking on my own spit again here. That was because we were actually having the dailies and weekly unfurloughs coincide, 122.42, 122.24. And what do you do with it now? I think you don't short this. This is still my stance on this. I think you put the stops in, you let this thing bang around a little bit, and that's regardless of whether the market moves up or down. I just am not extremely comfortable shorting Apple, and that's the answer to the email. Here we go. Let's take a look at the S&Ps. Here we go on the 2063.50 and that 2068 area. Moving around a little fast here because we're going to try to cover as much as we can before Joey gets on with us here. Again, I'm not. We haven't done any major actions this morning. For guys who are catching us late, I'm just kind of reviewing this. Not a big fan of stepping in large, long on the S&Ps. Here's the 240 numbers, and by the way, you can always get these. You can always get these numbers here in the scanner. And by the way, we have completed this little feature, which I think you'll love. This is working, and in my opinion, spot on, these paragraphs. So they're going to actually going to talk to Tommy at TFNN today about this, and it gives you just a landscape you can quickly access. A really cool little thing. Stops, inflection points, biased opinion. And we also have these now, which are on basically every instrument on the Brett scanner, which kind of gives you a little bit of help there too. And basing, it's really cool because it takes the internals and bases the talks and the speedometers around the inflection points of that particular index. So pretty proud of that. Been a long time coming. You guys probably think I'm lying because I've talked about it a lot and it hasn't been there, but it's going to be there now. That's the way that works. We got to take a look at this one because this is one we've continued to say stay away from the short side. Still saying that. And we're going to take a look at, the weekly view. This is the situation. Again, we were looking at the raw contract, got a profile appearing below. You got support at 12,243 on the weekly now, okay? So, and we're going to review these Asian indices. Here's the Shanghai. We're going to talk about this with Joey in just a second. Got a new profile appeared on the daily, well below. As you watch this, so you know that's extremely bullish. Hang out, guys. We're going to have Joseph John from Hong Kong in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we're blessed today to have Joseph Jung on with us from Hong Kong. Joey, are you there?
Yeah, I'm here.
Great. Good to hear your voice, man. Hope everything's going well in Hong Kong.
Glad to be back.
Good. Hey, listen, what the heck is going on with these Asian indices, the Shanghai and the Hang Seng? I mean, this thing has no end in sight. What's going on here?
The same thing happened in China as it did in Japan and Europe a few months back when Japan and Europe announced that they were going to do QE. China basically, 2 weeks ago said they were going to start easing, and that was the go-ahead for the retail guys to just jump in there. We had a huge breakout in Hong Kong after a very long. It's been one of the biggest lagging markets in the world. And even the A shares had been kind of zooming ahead, but Hong Kong had been still lagging, and the discount between the Hong Kong shares to the A shares, the domestic China shares, had been so wide, and they finally basically allowed the local mutual fund to start going into the local Chinese mutual funds to buy Hong Kong shares, thus allowing them to basically narrow that gap between the discounted H shares, which is the Hong Kong shares, and the A shares in China.
Right. Where do you think this thing could end up? I mean, like, I'm looking at the Hang Seng at 28,000 now, and I mean,
well, I think we're we've gone up about 12% on the HSI and about 16% on the HSCEI just in the last week or a little over a week. So I think we're getting.
Go ahead. Sorry.
Yeah, I think tomorrow or the next day we basically start running into some very short-term resistance. Just completely overbought. Some of the stocks that I'm looking at in the brokerage sector are up about 80 to 90% in the last 2 weeks. So
I was listening to you the past week. I mean, you got some things in your holdings that are up like 100%, aren't they?
yeah. I mean, they're up like
Incredible.
90%. It is just crazy. And they don't, there's some select tech stocks and brokerage shares. Those are. I mean, even Hong Kong Exchange, the biggest, the biggest cap of them all are. I mean, just take a look at 388. That stock has just gone crazy. So, really, I think we're getting a little bit overheated in the very short term, meaning in the next day or so, I expect a pullback. And you probably still buy that dip, because if you look back at 2007, you'll see that when these markets go, they don't stop for at the first 20%. They stop at 50, 60 or 80%. So yeah, I think we still have more legs to go. I don't know about 50, 60 or 80%, but right now it's 12 and 16% on HSI, HSCEI just in the last week. They're obviously off their lows, but I think they do have more legs to go. I would definitely try to trade this because it's already gone up so much in the last 2 weeks, and it's gone up in a straight line. So I would look to take some profits in the next day or so, and then try to buy it back like 5-10% below.
Well, for anybody who's not traded the Hang Seng Index, Joey, that's just, it has no volatility, right?
Exactly.
Man, I looked at it. I looked at it one.
The VHSI is the VHSI, which is the volatility index there, is up to 24, I believe, today. So, so yeah. Unlike I think when the Chinese markets rally, the volatility, doubles.
Right. Wow. Well, I know you had a couple of stocks we wanted to talk about today, but just before we go into that, can you pair your thoughts into possibly how this affects the U.S. markets and just kind of like a rising tide lift all boats kind of concept here, or what are your thoughts about the U.S., the S&Ps? Absolutely.
Yeah, the S&Ps, well, I wanted to talk more about the currency, really, and about kind of the bond market, because I think the currency has had a correction, and then in the last couple of days it started, the DXY has started going again, and I think part of it was because we've had some soft numbers, and a lot of that I think was seasonal. So I think from April to June, I think we're going to probably see economic numbers surprise to the upside again, and I think if you look at the last couple of months, I think this surprise index is one that has fallen a lot, but it's kind of a seasonal index, so basically a lot of the economists will be ratcheting down their numbers, and then we'll start seeing surprises to the upside again. So I think in the next few months we'll see surprises to the upside. So you'll probably see the dollar strengthen even more. There's a lot of talk about this 105 level in the euro is actually a short-term support, and we've gotten here pretty quickly from 110 to 105. just
Right.
in 3 days, right?
I know.
I think we're gonna sit here for a couple of days and then possibly test that 101.5 level, 101. I think that is the next level that we're looking at, and then obviously parity. And if that's the case, you might see going into May, perhaps, and
Right.
we'll use the market profiles to tell us. Perhaps in May, finally we hit some kind of a wall in the S&P and the Nasdaq, because then if what I'm thinking comes out correctly, is that the economic indicators start surprising to the upside, and then there's some more rate fears again going into June, or going to May, June, and then that's when the markets kind of get a little bit wobbly again.
You think it's still like, as we've said so many times about these treasuries, we're still in the buy the dip mentality on those things, or do you think that's kind of a crapshoot right now on direction on the bonds?
I think we're still buy the dip for the moment until I think maybe until May.
Yeah. I mean, the cool thing is, as me and you always talk about, is like, well, you kind of got to keep turning the wrench the same way until, we start breaking down below fair auctions profiles, whatever you want to call them, and that just ain't happening right now.
Exactly, and I think you stay with the trend, and the good thing here is that with the TAS tools, you can actually look at the market profiles. And you can actually see the breaks, and you can see new profiles coming, especially on the weeklies. If new profiles start, because the weekly profiles for the S&Ps has been all the way down there for a long time. And if we start seeing a new weekly profile starting to appear, then that could be a good sign that we're getting a little bit tired, and that could coincide with maybe the rate expectations starting to reappear again.
Cool. Well, let's get into a couple of individual instruments.
One other thing, one other thing is the breadth indicators that you have is just fantastic for this, because the last few times that we saw a big top in the market, we did witness the breadth indicators really coming off first. And that gave us a really good warning to a market top. So that's what we're looking at. I mean, those are the kind of warning signs I'm looking for in terms of stronger economic indicators coming through. The dollar really rallying, maybe to parity or 101 on the euro, and then around those levels, I'm going to start being just still be long as the profiles and the breadth indicators telling me that I should stay long.
Great. Yeah. Exactly. My thoughts exactly. So let's tell you what, we got about 5 minutes left before this segment ends. Can we look at the couple of those instruments that you threw out there? You want to take Netflix?
Yeah. Let's take a look at those.
Okay. This one has just come busted a spring here lately. I'm showing this on my screen right now, and the profile highs on the weekly on this are 469.5. We're trading 454. I think pre-market 468.70 right now. Excuse me. Good Lord, is that right? 468.
Yeah, that's right. Yeah.
Oh okay.
Yeah, there's an upgrade today.
Okay. All right. Well, what's your thoughts on this one? We're right at the weekly unfair highs.
Yeah, I've just been taking a look at this, and we're probably right back at the highs, but I don't know. We'll see if it breaks. I've been trading the range on this one, so let's take a look.
Yeah, I mean, I've got it up right now, and I've got weekly unfair highs at around 460. We're right where we're at right now, basically pre-market, and recent highs have been in the 486.50. So I guess what you're saying is if we don't stop here, we could especially a weekly close above that 469 area, it's going to be pretty damning for trading the long-term range again. So
That's right.
yeah, so that's the take on Netflix. You want to look at DDD or Qualcomm right now?
Qualcomm next.
Okay. Oh, let's see. Typed in too many M's here. Hold on. All right. Okay, so yeah, I mean, this one actually has been on our short list for a while.
Yeah.
We're trading 72.65 pre-market, so we got a little bit of a bump here, and we're right up into those weekly unfair lows, basically. So
yeah, just shorts have to be careful on this one because if you we've been on the short side of this for a long time. There is a report that one of the activist hedge funds has gone in today. So that's why the stock is actually up in pre-market. And if we can actually finish above this kind of 77, what is it, 70, yes, 73 to 74 level, then that's a clear sign that the shorts should probably get out because, once these activists groups get in there, then the dynamics of the stock changes, and you'll have more people kind of looking to cover shorts.
Right, I hear you. And this is coming from a guy who's in the middle of a lot of this on the trading side. He knows the temperament of the marketplace. Let's take a look at 3D. This is another one you kind of had on the radar screen.
Yeah, this one I just, it got way overbought, way overvalued for a long time. Basically, it's just letting the valuations catch up in terms of and letting the fundamentals catch up on this one. It's starting to get a little bit of a sign, but it's still way too early. But on a 5-10 year trade, this is still one of the best sectors to be in on the long side. But until we start breaking, where's the weekly unfair highs?
Yeah, 33.27 is the weekly unfair highs. But the cool thing is we started showing the kind of the little bit of the change in tone for the first time in a long time when we broke above 28 and we rattled around a couple of days there, moved higher. But yeah, I hear what you're saying. I mean, if we can get a weekly close about 33.27, that'll give you all the confirmation in the world that this thing could move north, and then the technical damage is on. We got about
that's it. I mean, this is the 3D printing is a great long-term story, but too many people piled in there too early, and this thing got way overblown. But it's really corrected nicely for a long time, and I'm just kind of looking for the volume, and the volume hasn't come in yet. So,
well, Joey, look, thanks for coming on today. I know it's nighttime over here, and I really appreciate your time, and I think everybody enjoyed that. Okay. So we'll pick it up again later with you. Okay, cool, guys. We'll be right back after the break, and then we'll try to cover some last-minute things for the market up here today.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. We are just really thankful that Joey was on with us for a while there. He's just got some great insight. Some of the things he talks about is more of a kind of 30,000 foot view and looking out in time and rotational type things that are going on in his mind, and some of the things that are apparent to him looking at the broad marketplace. It's just, it's just, I could talk to him for hours. It's like a book of knowledge. We're looking at the Nikkei right now, the June contract, 19,770, that unfair high on the weekly. That's our support on the Nikkei to possibly move even higher. And that coincides with that 19,770 on the weekly. So that's kind of one of the things you kind of dream about, is the weekly and daily lining up like that. And I'm gonna, oh my goodness, I have the S&P 500 here. Let me, anyway, those numbers are in the scanner. If you pull up the scanner, pull up the futures section, you'll see the Nikkei, and you'll see that dual inflection point lining up here. Here's some of the things that we're looking at with the S&P 500. Not a lot of reds, but there's not a lot of over excited views that I have looking at the possibility of the greens here. So we're going to take a look at some of the things that are not cooperating, as we do quite often, and we're going to pull those up, and we're going to take a look at some of the daily, or excuse me, the intermediate section below for unfair lows on our stocks that are not cooperating with the latest move up in the S&Ps. Bed Bath & Beyond, we talked about that. That's still on the radar screen. Kind of a cool trade. Costco fit in the bill there. Some of the other stock, Chubb Corp, Some of the other ones that are just sitting here, just kind of languishing. Some bank stocks are starting to appear on this. Some of these bank stocks are Newmont Mining Corp. That was kind of the situation the other day. Walmart, still one of my favorite shorts here. Let's just pull up Walmart really quick. WMT. Here we go. Again, one of those gifts that keeps on giving here. This is not an exciting trade, but what we talked about the other day was just placing the stops above 81.87, just letting this thing show its hand and just hope for some market pullback if we're going to get that. This is the type of situation you love to be in. And the good news, again, stops can be oriented between 81.87 and that 83.5 area, weekly inflows and daily inflows. Got a lot to get through up there, but if we get through it, we could be back in the game, at least drifting around the fair auctions on those weeklies and dailies. So just keep your radar screen in tune with that particular stock. Another one, we took a look the other day. We're just going to look at, let's see here. Well, News Corp A, News Corp Class A shares, NWSA, that's one of the other ones that's kind of been on the radar screen, still on the radar screen. Let's see, what's the other one else going to pull up today? UPS, we're going to kind of drift back into that one because this is another one that just kind of fits the bill here. And as we look at this, still 90, right below 100, we kind of got the signals. We got the profile up here well above. This is not an attractive situation technically. And again, if we can get some market help, UPS may drift a little bit lower. And you're just looking for kind of battle points to sell this at this stage. Latest battle point on the 240s, 97.33. T Rowe price, T Rowe. It's another interesting situation. Got about 20 seconds left here. And I tell you what, we're not going to get into T Rowe price because we don't have time. But guys, you've been great. Joey, John, thank you again for coming on the show. Steve Rhodes is next. You guys have a really good day trading today. It's Monday. You know what the levels are on the S&P. We talked about those. Pick it back up tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.